All right, Peter, all the headlines right there. 215,000 jobs created for the month of July is actually slightly below expectations. Wages up 0.2%. Nothing to write home about. Unemployment rate stays at 5.3%. Charles Payne, your observation on these numbers.
It's amazing. This actually came in just about as expected across the board. And I like manufacturing up 15,000. I mean, that's celebrating mediocrity. We'll bring back the old green shoots thing, but it's a disheartening report overall. Again, considering where we are, we talked about, and Liz, you kept bringing up the 4% growth that Jeb talked about. Think about when you come out of recessions, usually there's that elasticity thing and there's pent up demand. I mean, the notion that we haven't had 1 year where we have been gangbusters, instead people still have to be afraid, intimidated, pent up, frustrated, whatever you want to call it. This economy just can't get on track.
And the wages continue to be one of the major issues. That's what you guys were looking at, and it is weaker than expected.
Right. And, go ahead, Doug.
Well, I mean, this is just meh. This is, here we go again. And we haven't had 1 quarter of 5% growth. I mean, usually, you get something where it just pops and you get a big number. It's just missing entirely. And you can trace it back to the absence of real business investment. There's just no CapEx out there. There's no confidence in the future in the business community. And that's usually what drives a recovery.
And you trace that back to a regulatory environment which businesses complain has been too onerous and forced them to sit on cash.
Yeah, that's right. And, what is the S&P futures doing? A mix again.
We're down on the futures, and things have worsened as this report has come out. Take a look at what we're looking at. The market is going to open lower. This is certainly worse off. It's not hugely down, but we are weaker than we were before the numbers came out.
Yeah, they're going to rally on mediocrity. As Peter Boockvar has said, it's this typical rinse-repeat cycle that the S&P and the Dow has been doing on the Fed jobs report. Now, the question is, September, December, even next year, when does Fed raise by a quarter point, which historically that's the move it makes, a quarter point hike? Is it going to be one and done?
This isn't bad enough to put them on hold,
right.
though.
No,
if they've guaranteed... They've essentially guaranteed they're going in September.
Yep. Okay, so you think they do raise rates in September.
And this is not bad enough to change that course.
Yeah, you're right. It's not bad enough. That's right. Peter Barnes, what else can you tell us in terms of the headlines out of the report for July and what we might expect for next month?
Well, just a couple other numbers drilling down, Maria. We still have 8.3 million people who are unemployed looking for work, people working part-time for economic reasons because of weak business conditions, or that's the only kind of job they could find. That declined by actually 180,000 jobs in July to about 6.3 million. That's the lowest since September 2008. So the economy is slowly, steadily grinding out and grinding down the number of people working part-time. The broadest measure of the job market, the so-called U6, which includes total unemployed, people working marginally attached to the workforce, working part-time for economic reasons, was 10.4% in July, and that's the lowest level since June 2008, 7 years, and so that also is just slowly declining over time. Maria?
Thank you so much, Peter. Doug, you were just saying...
I think the decline in part-time work for economic reasons, a tiny little silver lining in there. If you look at the hours of work, they're up. Overtime demand's up a little bit. So, there's some evidence on the ground that we need more bodies into the labor force, but it's not pushing wages up yet.
I thought it was interesting that Peter reports that the areas that are hiring professional services, that's legal, that's administrative. Then you've got education and healthcare. That continues to be a job creator. And then retail. Charles.
It's one of those interesting recoveries where people with great skills are the ones who actually are making money and getting jobs and commanding higher wages. And the other part, and I think you mentioned the restaurants, people are spending at restaurants, and we are going out. This is odd because we're making just enough money to maybe go out to the mall on Saturday, go to TGI Fridays or something like that. And you are seeing it. We are eating out more than we eat at home. The big winners in the market this year, a lot of them are restaurant stocks like Buffalo Wild Wings. But it's not the kind of growth.
Some of that is the drop in gasoline prices is helping because you're willing to get in the car and you have extra money.
Finally, because we haven't seen the drop in gasoline.
That's been coming on for a while too.
Right. The drop in gas prices helps handling or paying for rising health care costs. What gets me, what they didn't take on last night is this discussion about about the minimum wage. The minimum wage was never meant to raise families on. We've fallen through the looking glass in this economy. Now we're under the Obama administration, because of poor economic growth, we're talking about raising families on the minimum wage when it was meant for people, college-age kids, to get their footing and to move up the income ladder.
One of the
reasons have already priced teenagers out of the job market.
Right.
The teenage unemployment rate is still 16%.
Right.
And if we go higher, it'll be more people like that. They just will not be able to compete.
Well, the conservative argument will be we need to grow the economy, and that will grow wages. That's always kind of the fallback position.
You have to believe this market is viewing this report as, yes, the Federal Reserve will raise rates come September, because the futures have been worsening. We're down about 53 points right now. We are expecting a lower opening for the broader averages on this number as things have worsened, as the market speculates that a jobs market that may not be where you wanted it to be, but is still showing growth, means the Fed raises rates
but I
next
think we
month.
also should talk about the fact that beyond this number, I don't think this number did anything for the market. So the market also is going on what's been happening, and the trend has been ugly. We've been in a stealth bear market. There have been so much collateral damage under the hood, and what kind of makes it look different is these big names, the Googles of the world, and they keep the major indices looking a lot healthier than they really are. But if you look at the breadth every single day, I think yesterday there was something like 50 new winners, 52 winners, highs on the New York Stock Exchange, and almost 350 lows. I mean, there's unmitigated damage in the market right now.
So
really
small
serious
leadership
damage
in the markets right now.
And so I think the overall what we're seeing is being masked a little bit, but not much.
Well,
not much
energy stocks have fallen out of bed, but also the energy companies with the massive layoffs that have been going on since the beginning of this year. How much does that continue with oil?
I was surprised there was only 4,000 in this number.
Right, but will you see more later in the year? Will that put pressure on the job creation potentially?
That's what to look for. We're going to take a short